Good morning, traders. Welcome to today's market snapshot session. My name is Samson Mzera, and I will be taking you through what events we've had this week and what to expect. So, as you know, this week we've had quite a number of meetings. Well, I view my chat. We've had quite a number of meetings, and we've had the better part of this New Year's volatility happening all within 1 week. That is, we had the Bank of England, we had the FOMC coming out, and we'll be trying to unpack all of that in today's session, including what to expect for the following week and how the charts are looking like. So I have my charts here, and we'll quickly move to the calendar just to get a feel of what has been happening. So there are a few articles that we will go through together. So again, if you can also hear me from the chat section, just say a good morning or a hey. Martinez, good morning. Okay, so I'm using Forex Factory for now, but we'll be changing and we'll start using equity tools from the portal. So from the next session, we'll just be using FXpressor portal for all the fundamental analysis. Yeah, so let's just have a go through of the major events this week. Coming in, we had a lot of employment data coming in. So we have JOLTS over here, and we also have ADP. So remember, these are separate firms that try and compute the level of jobs in the economy. So while they might not be as accurate, they serve as a good feel for the week for the main jobs report data, which is non-farm employment change. So remember, when you're looking at ADP and JOLTS, yes, both of them talk about employment, but they're not the main sources of employment data. So for that, you have to wait for ADP. So the only thing that JOLTS and ADP can give you. So JOLTS came in on 30th, which is on Tuesday. JOLTS job openings, it came in higher than expected, caused a bit of excitement in the markets. And then on Tuesday, we had ADP with their employment reading, it came in lower than expected. Yeah, so if you look at both these data points, you can see that it's not so far off. Remember, when we have employment, a huge discrepancy is usually in the hundreds of thousands, not tens of thousands. So if we have 107K and the estimate was 148K, then it's still within reasonable expectations. Same thing here with now JOLTS was kind of high. So JOLTS, the expectation or the forecast was this, and it came in very high at 9 million. So those two, although not very accurate, usually just give us a good feel of what to expect for Friday. So what do we expect today? With the USD non-farm employment, we expect a lower reading. Now remember, when you're trading forecast, we all Madia, good morning. Khalifa, good hi. Yeah, so I hope you can hear me clearly. And again, we are trying to assess what to look forward to in the coming week. Majority of the news for the month is already done. Don't think we'll have any heavy announcements maybe until the last part of February. So we are good with our technicals if you're able to establish fundamental direction. And that is having a look and feeling for the markets and just knowing where things are going to go. So first things first, we are talking about non-farm employment figures. And although they are very observed by traders, we'll talk about what the Fed commented on employment was it Wednesday? Yeah, so again, the expectation here is 187K. And I think because of this, then we have some support with a weak dollar. Remember, coming off the back of the meeting. So we had the meeting, FOMC meeting. The Fed made a few remarks that really shook the markets. And the main thing that I picked from the press conference was Powell saying they're not going to cut rates in March. So let's just quickly go through that. Yeah, so I think this article sums it up. So yes, there usually is the minutes and and you can read what they've said from the website, but then the press conference is usually more important because you can say something and then it gets everyone off guard. So Chairman Powell highlighted the persistent existence of elevated inflation and emphasized robust economic growth. Now, the reason you're looking at employment today is to see if this is the case. Yeah, whether there is robust economic growth, indicating a reduced likelihood of imminent rate cuts. So he said there is nothing like a rate cut in March. And if you look at the probabilities, so here we're looking at 20th March 2024, the probability of easing, which is a cut, went all the way below 50%, and it's now sitting at 36.15%. That means the market is starting to price in the possibility that, of course, they're not going to be cuts on March. So a lot of guys had started talking that there'll be rate cuts on March, and that means a very weak dollar. Yeah. And because he said they're not going to be rate cuts, then there was a lot of repricing in the markets, and that's why we had some temporary strength in the dollar. So if you look at what happened or what transpired that day, you can see that there was a sharp drop. So this entire move over here, so we had this push downwards over here. That was on gold. There was a very huge push downwards on the night of the meeting. If you look at also Euro USD on the night of the same meeting, because it was very late at night, you can see that Euro USD also managed to push lower. So if I highlight the day of the meeting, it was basically this move over here. So I hope you can see this move over here. So this was the down move paused yesterday. I mean on Wednesday, because of those comments that we're not going to cut on much. Also, if you take a look at something else like stocks, you can see this huge, massive drop over here based off of those comments. Now, what does that exactly mean? If there are no cuts on March, that means we're going to see interest rates for the US being elevated for a bit longer. And that means things like the dollar itself is going to continue being strong. That's why we had a bit of a drop in gold, in euro, and also in other currencies, like, for example, the Japanese yen. So for Japanese yen, it's opposite. That means it was this push upwards. So it's the opposite. Yeah. So I think I also need to bring up my GBP USD chart. So you're just having a look at what has happened this week, and then from there we're able to know what to expect. So chart window, just a minute. Okay, so the same thing also happened. So remember, most of these moves are usually just correlated. When one thing happens on one chart, on one currency, it applies flat out to all other currencies. So in this case, we had this push, and it did extend downwards for the better part of yesterday. Yeah, so that entire move downwards. But then coming off to yesterday evening, it seems as though people just dismissed that entire comment, and we started seeing the dollar weakening again. So in this case, we saw the dollar coming back up. So we had this push over here. I think we'll talk about the NFP. There is something Powell said, and that is what is keeping me a bit skeptical about emphasizing too much on NFP. Powell said the jobs report is very good. I mean that the economy is looking well, and he's not really concentrating on the jobs report, something like that. So he mentioned something like that, and it got me really skeptical about what the impact of the jobs report might be on the markets. Remember, the reason NFP reacts to the market is because the Fed usually follows it. Yeah. And during the press conference, he said that he's not really looking too keenly at employment data, which of course he is, but because it's a dual mandate, he needs to look at employment and inflation. But he said he's not really focused too much on employment because the economy is already doing well. And that is giving me a bit of skepticism of whether employment data is going to cause any strength in the markets. Because again, if it's not going to affect his judgment, then we might either see something like a whipsaw or just some movement that's going to be reversed. But we need to have that interpreted in a context, in a proper context. So we'll get into the analysis of NFP in a bit. So as I was saying, coming late yesterday, we had the dollar resuming its weakness. So we had that push over there on Euro USD. We had that push over there. So you can see even on a USD JPY, it continued moving lower. That means the dollar was weakening flat out, even on a US 30. So when I talk about US 30, you can compare it also with US 500 and the likes. So here you can see that it's like the market was dismissing those comments. And there's an article that was putting it nicely. So let's go back to this calendar. Remember why again this is important? It's because we are trying to see when they'll start cutting. And if we can see that, then we can sort of have a clear prediction of when the dollar is indeed going to be very weak. Yeah, and that can give you a good trend to trade. So, this week, was it this article? Well, you can just go through it. I hope you can clearly see the article from here. So this week's price action in US rates market was instructive, despite the Federal Reserve pushing back against prospects of a March cut. Remember, we've already discussed this. Interest rates have still come lower. That means it's like the market is still not in believe that they'll not cut in much. So there's some pushback on that. That may be the function of investors watching US regional banks remaining under pressure. Now, this is one thing that was really affecting the US last year because the US economy has very high interest rates, and these banks have a lot of illiquid assets with them, deposits, and they were really coming under pressure because they bought a lot of treasuries when the interest rates were low and people want to withdraw. But if they withdraw, then these guys will have to sell their treasury bonds at a loss. So there's that sort of pushback with the US regional bank. So the market is thinking because these banks are still under pressure, the Fed has to save them by cutting rates. Yeah. So that's basically what this statement is. Or so they're trying to assess why they think those comments might not have any impact on the market. So, or more likely, it reflects the conviction that policy rates are coming lower this year, and there is no point fighting this overwhelming trend. So the other explanation was it doesn't matter when they start cutting. We just know that they're going to start cutting this year. Yeah, and that is what is driving the dollar weakness. You can remember when we started the analysis late into December and January, started talking about dollar weakness, and that is the trend that we're seeing in the markets. There, we know they're going to cut rates. The only problem is when do we start finally seeing a weak dollar? Remember, even the Kenya shilling has been affected by this trend. Yeah, this is the reason that the dollar did not build any gains seen early yesterday. So probably that could explain that. Okay, now let's talk about the jobs report. So coming today, we have a US January jobs report, and the consensus is, which the estimate is 185,000. So remember, when you're looking at your calendars, it's good to cross-check these estimates. So here on Forex Factory, the estimate is 187,000. On ING, the estimate is 185. So when you have, for example, the actual figure being within 180, 170, it's within estimates. It doesn't have to be exactly at 187K. Yeah, I hope that's clear. So that you can see a red figure because it's maybe at 180. That's still within estimates. It has to be a very huge difference for it to actually make a huge impact on the market. That's why sometimes we have whipsaws because people are thinking the actual has come in at 170K. You're already trying to sell USD. That's still within reasonable estimates. Yeah, so different sites have different estimates or consensus regarding employment. So the consensus for this for 185K in jobs gains, while the forecast is plus 200K. However, the Fed seems pretty comfortable that the labor market is coming into better balance, and without a 200K plus number to trigger any major repricing of the Fed's easing cycle. So on Wednesday, the Fed was very adamant, they were really pushing on the idea that the US economy is stable, jobs are being created, and things like that. So that means if you go back to this calendar, anything above 187K or anything around 200K is basically reaffirming what the Fed say. Yeah. And if it reaffirms what the Fed says, then you're going to see a resumption of that kind of dollar strength, a bit of dollar strength. Remember what happened again. Let's go back to this chart. Remember what happened, and these are the points I've highlighted here. When he said we're not cutting in March, the market dropped across all the charts. XAUUSD, we had this drop over here. GBP USD, we had this huge drop over here. So you can see if indeed we have that high reading, it's going to reaffirm this comment, and you're going to see the market kind of reaffirming what the Fed is saying. Yeah. So the same thing with the euro, we had that drop over there. However, if we start seeing weaker reading, and by weaker reading, let's put it at something like 160K going downwards. Now that's a very huge difference from what it's 187K. Yeah. So anything below 160K is where now we start getting worried that maybe they are, or those comments might not be very strong. Yeah. So now we know any strong reading, anything above 200,000, not even 187,000, even if it comes at 190, it's still anything above 200,000 is what is going to reaffirm what the Fed was saying or was talking about. That means we might see a stronger dollar. Anything below 160, that's when we, and significantly below, so it doesn't have to be 160, but significantly below 187K. Usually the jobs report, you can have a margin of very huge, like November 3rd. Yeah, expectation was on 178K, it came in at 150K. This is not a huge difference. A huge difference is something like this. Expectation is 171K, came in at 300. Now that's a big difference. Yeah. So these minute differences in the tens of thousands usually doesn't have that much of an impact unless it's something really substantial. Yeah. Okay, now let's continue with this article. So instead, we are another thing, this is very important. Usually they revise the previous employment numbers to know because they have more time to work with. So here ING, the analysts are interested to see whether the December's employment number, remember in December, the employment number came in at, so usually the Fed revises these numbers, and that also has an impact. So in as much as we're looking at today's employment data, they have the likelihood of revising this to 2,116,000. There's a huge possibility. They usually just revise these numbers. So if they revise lower, then it also has an impact because remember we are looking at the employment trend and not necessarily one data point in the market. We're looking at that trend. Is it a downtrend? Is it an uptrend? And that is what is going to guide traders. Okay. So if this trend seems to be declining, then that's going to have an issue. But we'll just have to cover that anyway. Instead, we are interested to see whether December's 216K number is revised downward. And if it's revised downward, then that means the labor market is weakening. So while the data is being released, also keep an eye on that January 1st reading. Remember the reading for January is for December. The reading for today is for January. So the data is usually for the previous month. This will represent 11 of the 12-month releases being revised lower. Yeah. So, and there's been a conspiracy around this that the readings will be, they usually set to just come in high every time, and then they revise them lower later. So it's usually, I don't know if it's true or not, but it's usually a conspiracy that of the past, and indeed for the past 11 non-farm payrolls, every time they've released them higher than expected, and then they revise them lower later. So it's like they're trying to save face, and they're trying to not look bad. Some people, that's what they're saying. So if that's the case, then usually they release a high number, and then later they'll slowly just revise that number lower to what it was actually, the actual reading. So that's one thing you can look into. So, and because they've done this for the past 11 non-farms, then you can tell that maybe indeed the economy is weakening and the dollar needs to be weaker. Yeah, so that's something you need to watch out for. And jobs releases being revised low and supports the Fed continuation, uh, the Fed's contention that tighter US labor markets are a thing of the past. Yeah, so that's what the Fed has been saying. The labor market is strong. There's nothing to worry about in terms of growth of the economy. And if they're saying that and what we're seeing with the numbers is false, then that's going to be cause for alarm or concern. Yeah. Okay, so that's with NFP. I think we can go to the charts and just have a look at how the market is structured for the day. So we'll start with gold and just remove this. So if you look at the 4-hour chart, we made these highs over here. So there was this peak. I think we took out these highs over here for gold, and that was because of that repricing of the expectations. So initially the comments made gold go lower, and it's like the market isn't really convinced, and we went back higher. So let me just thicken this so that we can see it clearly. So we went back higher, took these highs over here. Remember that there's also a level of interest over here that we will be watching. So if you're using your charts or if you're analyzing your charts, you can just confirm with mine whether what you're doing is the same. So there's this level over here. Yeah, that's on the 4 hours. Over here. So if indeed we see what is happening, that is a weaker reading and a significantly weaker reading, it shouldn't be close to the number that you're looking at, which is what? Is it 180? I think it's 180. It should be significantly lower or significantly higher. Yeah, I think I've made that clear in the explanation. So if it's 180K, it's still within the estimate. So that's okay. It should be significantly higher. Things like this here. This one was significantly higher, and even this one was significantly higher because it's by 100,000 almost. Not necessarily, but it's changed the the number here. So it needs to be not a few thousands, but a lot of thousands. Yeah, tens of thousands, that is. Okay, so let's go back to this chart and just finish analysis on gold. So yeah, this is an area of interest we'll be looking to see if indeed we will have a break higher, if we have a significantly lower reading. Yeah, what could be the next target? I think I've deleted it. Just a minute. So you can mark these levels together. That level over there, I'm on the 4-hour chart time frame. So there's that level over there, and you've said it cleared these highs yesterday. And I'll be looking to see if we have lower readings, significantly lower readings, if we can get to this point over here. So that's another area. We have this imbalance over here. So I think this is a good area to see if the market can reach for that. However, on the immediate front, we have very interesting lows over here. So you have kind of equal, they're not equal, but we have equal lows here, which will be a very good case, will make a very good case for a sweep lower to this region over here. So we have this over here, this small area over here, which you can look for if the market, if you have a higher reading. However, because we expect, the expectation here is for a weaker reading already. So it is possible. So the expectation, usually the market also follows expectation. The expectation is for a weaker reading. So it is possible that we can see gold remaining elevated because we're expecting a weaker reading anyways. You can see gold remaining elevated. So I'll be very careful. If I was to see gold coming below this, I wouldn't want to sell gold for the better part of the day until I see the payments data. And it is also possible that because we're expecting a weaker reading, that gold will slowly like trend higher. Oh, sorry, trend higher until you have that reading. Then from there we can know the actual direction. So that's one thing to watch out for. So if I see anything moving below the Asian low, because we have an Asian low over here, if I see anything moving below the Asian low, I'll be very skeptical. It might be a liquidity, a draw of liquidity and then back up. The only time I'll be convinced is if we consistently form lower lows. That's when I'll be convinced we're going to these lows over here. Other than that, it might just be a sweep for liquidity to go higher. So be very careful with these lows over here and thinking that we're going lower. Yeah, so that's the only precaution we'll take with gold for today. Moving on to GBP USD, I'll just clear this, go to the 4 hour. So we've been in a range for quite some time. So we have these clear lows over here. If you can see them. And then we have this area of interest over here. Yeah. So these are areas of it. Then you have this imbalance over here. So it is possible that when we have that strong reading and even the strength of a dollar won't be, it won't last for long because we know at the end of the year the dollar has to weaken. So I'll be also very skeptical trying to hold dollar for long term, like shorting this for long term. I'll be very careful with that also if you're attempting to trade that. And then you have this region over here. I don't see any sweeps in liquidity, so it's possible that we might sweep this and get into this OB that we have. Is it an OB really? Maybe you can confirm in the comments, but I'll just mark it over here. So you can have those two levels marked on your charts like that. Yeah, as we wait for so intraday, again, be very careful with any lows, especially on something that has USD on the second side of the pair. Anything that has USD on the second side of the pair, be very careful with trying to take it lower, just for now. So you can even wait until 4:30, or you can try and play it out, but very carefully. Yeah, so we have that on the charts for GBP USD. And then now for US30. Now this one is a very interesting one because, and this is something we were discussing with a few of the traders. In most years, when the Fed is easing or cutting rates, and this is when this is let me see. So the January is over here. In most years, usually things like US 500 and US 30 will end up positive by December or higher than where they started in January because of easy monetary policy. So this is where we started on January. This is the price on January. So in most years, when the Fed is cutting rates, we will have S&P printing high by December. So I've seen a lot of traders enter very small lot sizes and just hold this until December. So a lot of traders are planning to hold US 30, US 500, UT 100 till the end of the year. Because in most years when you're easing, it's only in very a few years that you'll see things like the S&P ending up low. And the only time in this decade that you've seen the S&P ending lower than where it started on January was in 2022. So this is 2022 over here. You can see that we started here on January. I'm on the weekly chart. We started here on January and we ended lower. But in most years, we will end higher than where we started in January. Even the year we had COVID. I don't know if I can say that for the algorithm, but yeah. Even for the year we had the pandemic, it kind of ended up higher than where we started. So in most years, the S&P, and this is 2018, I think here we're also kind of cutting. So you can see there are very few years for things like the S&P where it ends up lower than January. But this is something we will just follow through once the Fed starts cutting rates. That's when we'll know indeed we'll end up higher for the year. So you can just do your own back testing and see how many years out of the past 15 years, for example, did the S&P end up lower than where it was in January. Yeah, or even the US 30. Okay, now back to today. Again, the market seems to be, now you're printing new highs, so there's nothing to look at higher than this. But for the lows, we have at least an area where we can call an area of demand over here that we can wait for. And another area of demand is here, this one. Yeah. But if we look carefully, we also have these laws over here that I'll be interested to know how the market will react. So these two laws over here. So I think this one I can, oh, I haven't highlighted. Just a minute. I need to remove the highlights. So it was this point over here. Minute there. And so if you're marking US 30, you can also just follow what I'm doing. So I think those ones are good. Over here, like that. And then if we go to the 1 hour, I want to see what happens on these lows over there, like that. So again, be very keen in those areas. And then we have Wednesday's highs. Or is it? Yeah, Wednesday's highs over here. So I'm sure if someone was attempting to sell, then we'll have a number of stop losses for liquidity above this high over there. So some point above here. So that's where we'll be looking to see what happens. Same thing for EURUSD. This one was already marked, so it makes my work easier. If we go to the 4 hour, we have this level that has been here for some time. So I'm going, it's not a supply zone or a B, it's just a general area of resistance over here. The market has been hovering around here for some time. Yeah. So we just have to mark that. Alternatively, we also had us feeling this imbalance over here up to this point of demand, and that's where we went higher for the market. So again, based on what we've discussed earlier in the video, this should be a good point to monitor. So what are we monitoring? You're monitoring any signs of a clear break above this area for us to go higher. And again, I'll be very careful attempting to sell this. Yeah, we might sell, but very careful with it because sentiment is not for a strong dollar at the moment. Yeah. So if I see a significant break, so if you see a significant break here and it holds below this level, actually today's lows are here. So if you see a significant break below this session lows, then probably we are targeting to fill this section over here. So I'll be keen to know how much of this will be filled, this imbalance from here till here. Yeah, so there's that level and there's this level over here. Yeah. So will it be 50%? Will it be the entire move, or will it just go down to here? Alternatively, we might trend slowly higher, but I wouldn't get or jump into any trend until I'm sure with the NFP reading. Okay, so I think we've covered the three main pairs. USD JPY, I'm still trying to deduce or decode the news for BOJ, so I won't be looking at this for today. But again, you can just follow the sentiment or the Q on the dollar movement for your trades. Okay, let's go back to this. Okay, so I believe you've been able to mark your charts also, so you can mark them out like that so that now we wait for the pairs and we see how NFP plays out. Okay, let's just go through the other pairs and we'll just talk about euro and pound. So so short date eurozone interest rate got a lift yesterday from January CPI numbers for inflation. Our economists, there's something they've mentioned. So they're expecting the ECB to continue having high interest rates. And that is making a case for them. Euro USD did not spend too long under 1.08 at all yesterday. If today's US NFP figure is indeed benign, that means it's low, then Euro USD can go to these highs 875 to 9. So 0.875 to 9. So let's just have a look at that on the charts over here. So mind you've already marked this. So yeah, so these are the levels we've marked already. So it's this region over here, of which it's already gotten there. But these are the levels. Let me just mark 1.09. Like that. So that's 1.09 flat. But you can confirm with my FX book, sorry, not my FX book, Forex Live, to see if there are any orders that traders have. So let me just cross check for you. You are my FX book. Do you have any key levels for Euro? No, we don't. Yeah, we don't. We don't have any levels. So these are the levels. Yeah, so there's only one small one at 1.07. So we are good. I believe nobody wants to wait for with trades in the market, especially on a day like today. Okay, so that's what this article is saying. However, 1 month Euro USD realized volatility continues to drift around lows near 6% and implied volatility. So this one probably is for option traders who want to participate in options. Okay, I think that's it for the analysis today. So I think we are well prepared for NFP. So I'll just go through the questions. Good scenario, good explanation. Thanks. NFP. So remember, the Federal Reserve has a dual mandate. NFP is a good proxy for the state of the economy, non-farm employment, that is. And CPI is a good proxy for inflation. So the Fed has to balance the two. So you can't have one growing without the other one being affected. So when you have too much employment, inflation usually goes very hot. And when you have too high inflation, it's not good for employment. Yeah. So usually the Fed has to balance the two by using monetary policy. And one of the main tools is interest rates. That's where interest rates come in. But then the side effect of interest rates is now it affects the value of the currency. Yeah, but we can have a deep, I think there's a playlist on fundamental analysis somewhere in the FXpress YouTube section. So you can just go through that slowly and just understand the relationship. Yeah. Okay. Is GJ affected by NFP? So all I know from GJ is when you multiply, so let me just open, when you multiply the rate for just a minute. Huh. So if I was to take USD JPY, which is at 146,643 times the price of GU 1.27590, I'll get the price of GJ. Yeah, so if both of them are moving up, that is USD JPY is going higher and GU is going higher, then GJ goes up. But other than that, I don't think there's any direct relationship other than the fact that the rate of GJ can be gotten from USD JPY and GU. Okay, I think that's it for today's session. Again, thanks for attending. It was a good one. I was trying to keep it brief, but now we know what to do for the rest of the day. We can either just have a waiting game or we just mark our charts out and see how it's going to play. There's going to be a stronger impact on a weak NFP reading. The impact, if you have a weak NFP reading, it's going to be very strong for the trend. That means the weak dollar is going to be very solidified. The theory of a weak dollar. Okay. Having said that, again, thanks for attending. See you in the next week's session. Next week, we don't have a lot of fundamentals, so it will also be a bit brief. Okay, goodbye.